Hey everyone, welcome to Bald Guy Money. I am Bald Guy, and a big thing just happened for silver. And for those of you who don't follow the markets closely or don't pay attention to the opening and closing prices, let me please explain. The little price pumps or dumps you see in the middle of the trading day, those don't really mean much at all. Sure, they indicate how bullish or bearish the market is over the short term, but what ultimately dictates the direction that price is moving in are the weekly and monthly closing prices. This is where your longer term trends are born. And my dear viewers watching this video, we closed this week at the highest nominal price for silver in 11 years. Now, I know it's not $30 per ounce, and I know so many of you are itching to see $50 per ounce silver, but this is an important step, a clear sign from the market that higher prices are likely on the way as people continue to purchase metals in an uncertain economic and geopolitical environment. And as modest as the 1.6% gain over the last week was, what I want you all to keep in mind is that this gain happened on the backdrop of a stock market that is starting to pull back. And you can clearly see that here in ranking data of the market's top 10 assets by value that are not bonds or real estate, where 7 of the 10 assets are down over the last 30 days, with only gold, Google, and silver gaining over that same period. And big names like Nvidia starting to make big moves down. I mean, that stock was down 10% on Friday alone. So, considering those important data points, in this video, I want to talk about what I think is coming next for silver and its price development. I want to talk about what metrics I'm using to support my assumption that silver still has room to run. And right before we get into this video's viewer question, I want to talk about what I think will be the catalyst, the spark, the driver that will move silver up above $30 per ounce and potentially beyond. Now, just before we get into it, if you're in the USA and want to buy gold or silver at a great price from a dealer that you can trust, please check out channel partner Pimbex at pimbex.com. They have an amazing assortment of the best metals for stacking. This here, what you see on the screen, is just a small sample of what they have. And for those of you who want to get some gold and silver in your IRA, they can help. Call them for a free consultation at the number on the screen to find out how. Just please tell them you came from the Bald Guy Money channel. Okay, so getting into it, last week I told you that I am buying silver, despite a lot of people in the precious metal space saying that there would be a pullback. Now, this is not a victory lap by any means. Again, the gains were modest, but the gains are coming in an environment where we might expect prices to pull back. I mean, here we're looking at the Dow Jones Industrial Average, which is down nearly 5% from its 2024 highs and is almost flat for the year now. And the market is becoming fearful as a result, as we can see here on the Fear and Greed Index. And of course it is. I mean, I already mentioned Nvidia's 10% pullback on Friday, and all I can say at this point is that this stock market correction has been long overdue. And I don't expect a miraculous recovery considering how weak the consumer is right now, with credit card delinquencies piling up and the US labor market adding primarily part-time and government jobs, while the rest of the world is actually seeing unemployment rates go up. This is not a healthy economic environment. And because of this fear and underlying weakness, breaking that $30 threshold for silver is not going to be easy, because there are computers all around the world right now, as I'm making this video, that are programmed to sell paper silver positions every time silver peaks above $29 per ounce. And that's not me being bearish on silver. And it's not a commentary on the very real disconnect between the physical silver and the paper silver markets. What it is a message to you all watching this video that we may see some sideways chop on silver before we break above the $30 per ounce level. And when it comes to actionable commentary, because that's what we're about here, we're talking about actionable commentary, I think the best way to approach this is simply watch for the bigger price rejections around the $30 level and place your orders for silver there for all of you watching who are still stacking silver, of course. Because silver is testing up right now, and I will use a nice analogy that I have heard Gareth Soloway use before. As price tests up or down, key resistance and key support levels are like doors, and you have to pound on the door a few times before it weakens and finally breaks. And right now for silver, that door is $30 an ounce. And I can't tell you exactly when it's going to break, but what I can say is that once the door falls down, there is a party on the other side of that door where silver has a great chance to make $5 per ounce moves in a month. Just like we saw in 2011, by the way. And armed with that knowledge, I am happy with my last purchase of silver. I purchased 20 Austrian Philharmonic coins, and it may actually be the last purchase of sovereign coins I make before moving to bars as the premiums are starting to go up. And now is a time, as I just said, that we should remain calm and pick the best possible entry points. Because silver isn't overvalued by any means. In fact, it's far from it. And here we're looking at a screenshot from my gold and silver price analysis tool. And for those of you who want access to this, it is available on Patreon. And the price of Patreon is finally going up tomorrow to $14.99 per month. So if you want to lock in the lower price for a year, currently a year's subscription costs around $100. That price is obviously going to go up as well. You can still do that right now before the price changes. But this tool here that you're looking at compares the price of silver and gold to the S&P 500, to the price of oil, to the price of sugar, and the median price for a home in the United States to determine if silver, and also there are separate tabs for gold there, but here we're talking about silver, is cheap, neutral, or expensive. And when we look at the 15-year timeline, you can see here that silver's affordability number is still around half of what it was when we were at the 2011 highs, which tells me there's still a lot of room for silver to move as the market deteriorates further, and I will talk about the catalyst I am looking for shortly. But the other sign I am looking at is how silver is developing by itself versus the housing market. And this chart here shows the median sale price for a home in the United States. So these are not fictional numbers of sellers listing their homes at overinflated prices. This is the reality of the US housing market. And the market is pulling back as the impact of higher interest rates and a weaker labor market are finally starting to be felt. And I admit it took longer to happen than I had expected, but I'd rather be able to recognize a red flag early than not be able to recognize a red flag at all. Now, when it comes to how I track this, many of you will already know that I plan on selling some of my metals to purchase real estate in the future. And I know the idea of selling metals to many people is a sin, and that people are going to start talking about insurance costs and property taxes in the comments. So to those of you furiously typing on the keyboard right now, just know that I have a lot of experience in real estate. I own multiple properties, and I'm doing just fine. So if that's not a trade that you like, that's okay. But this tool here, and it is also available on my Patreon, shows me, and it can show you as well, exactly how the price of silver stacks up versus real estate. And as you can see here on the screen, the last time we had a sell rating on silver was as far back as 2013, when the housing opportunity ratio, which shows how many ounces of silver it takes to buy a house, was well below 10,000. And if you look at where we are today, close to 14,500 ounces for a median home, this is just another indicator that tells me silver still has room to run. Now, just before we get to the viewer question for this video, what do I think will be the catalyst for silver's big move up? When it will reach a point where my tools indicate that the price of silver is expensive and that I might want to consider initiating a sale to purchase real estate. Well, that catalyst is the coming turmoil I expect in banking. And I expect that to be triggered by a decline in economic activity, a sell-off on the stock market, which we're already starting to see signs of, and defaults on loans. all of which will hit the banks like a ton of bricks and will force Jerome Powell and his friends at the US Federal Reserve to bail them out, starting another round of quantitative easing, which is just code for printing money. Money the Federal Reserve will use to save the bond market, which, if we look at the TLT 20-year US bond ETF, which is on the screen right now, it's down in value 15% over the last year and more than 9% so far in 2024. Because, mark my words, this turmoil, lost jobs, shrinking stock valuations, it's going to make people nervous. It will force many people to try to access money they've been saving in the bank, and that's money that the banks simply don't have because much of it is tied up in these bonds, the bonds right here that you see on the screen, and they are not worth the price that the banks paid for them using your money that you have deposited in the banks. And they simply won't be able to wait for these bonds to mature. There's simply not enough time as people start to take their money out of the bank to cover their day-to-day costs. So if you're watching this video because you're curious about metals, maybe you want to buy some, or if you're on the other side wondering if you should sell because maybe you think we've topped out, no matter what you choose to do, because none of this is advice, just give it some careful consideration, because from my point of view, we're only really getting started on the metals bull run, and the real prices are going to start revealing themselves once everyone realizes the emperor has no clothes. And in this case, the emperor is the global economy. It's the soft landing we were told we were going to get, as well as the safety of the US dollar. Because if what happened yesterday is any indication of the future of the US dollar, that being a move towards the confiscation of frozen Russian assets to be handed over to Ukraine to fund their fight against Russia, a lot of money that's going to be looking for safety won't be seeking that safety in US bonds. It'll be seeking safety in metals. And with gold being as high as it is right now, there will be a lot of regular people seeing themselves further priced out of the gold market as it continues to move higher, causing a flood of money that's retail money, so regular investor money, like my money, like your money, to move into silver. And that's why I think the move on silver is going to be big, and it will likely come fast. And with that said, now it's time to move on to our viewer question for this video. I answer one viewer question in every video I do, so please be sure to submit your questions in the comments section if you have any. And this week's question comes from Jean-Louis Lalonde. Greetings, Jean-Louis. He asked, clearly the next hurdle for silver is $30. Once pushed through, the sky is the limit. I agree. But I wonder, once gold and silver go to the moon, will their prices stay high or will they come down just like they did in 2011? And it's a fair question. So let's take a look at what history tells us and let me tell you what I think. So here are two charts, one for gold and one for silver, side by side to show you exactly what happened leading up to and after the last blow-off top we saw on metals, which was in 2011. And as you can see, Jean-Louis is absolutely correct. Metals came way back down after the blow-off top, as we saw a 41% correction on gold from the blow-off top closing high to the low that followed it. And on silver, that number was 72%, so an even more exaggerated correction from the high to the low. And what I want to say here is what I have been saying basically on the channel for a long time now is, yes, there will be a correction after the blow-off top. There always is, because the market always runs higher than it should, and if you want proof of that, just take a look at an Nvidia chart right now. The second thing I want to say is, remember my message about gold's stability. And this is a message especially for retirees and people preparing for retirement. If you want peace of mind in metals, you will find more peace of mind in gold than you will in silver, because silver is far more volatile than gold. Now to some observations. If we take 2005 as the baseline period leading up to the economic troubles that caused the metals blow-off top, you can see that both gold and silver bottomed out higher than where they started in 2005. And I think that's a good thing for all metal stackers to consider, because this is a long-term game, and buying metals when things are calm will always yield the best results when things get ugly. If you start stacking in the middle of the storm, then it may take you longer to benefit than diligent DCA stackers. And DCA, remember, that's dollar cost averaging. So people who simply buy on a schedule or are planning on buying the pullbacks. Now, what's different this time around versus the last metals blow off top is this. When things started to fall apart the last time, there were a lot of countries lining up and willing to chip in to save the US dollar and the global financial system. And if you remember, China bought a boatload of US debt back then. Now, with the developments I just mentioned concerning Russian assets being used against them, how willing do you think countries are going to be this time around to pile into US debt? I'd say the answer to that is less likely. And that's why this time around, although we will certainly see a peak and then a pullback, I would expect the pullbacks to be a lot less exaggerated this next time around than they were after the 2011 blow-off top. And we may see gold pull back around 20 to 25%. I certainly don't expect to see a 40% pullback this time around, but I still see it landing higher than where we started. And silver, I can see that pulling back even less than 40% this time around, as increased industrial demand adds pressure on supply that simply didn't exist at the same level as it did back in 2012. So, Jean-Louis, I hope that answers your question. I thank you very much for submitting it, and I hope for all the viewers out there who are asking themselves the same question, that this answer gives you some food for thought. With that said, that's it for this video. I want to thank you all for joining me once again in my makeshift studio. I've got the blue paper clip here holding the microphone in place. I am traveling again, just in case you're wondering what's going on with me. In fact, I'm planning on going on YouTube full time, so I'll be able to deliver you guys more content. I'm going to be able to focus on delivering better quality content, and I certainly hope hearing this message, you'll use this as an opportunity to like, share my videos, and subscribe in order to support my journey in becoming a full-time YouTuber right here talking about gold and silver and the economy at large, delivering the information to you on a weekly basis. So, thanks again for watching. I'm wishing you all the best for the rest of the day. And as I always say at the end of my videos, take care of yourselves and take care of each other. Goodbye.